All right, let's jump right into this week's explainer. And trust me, it's a wild one. We're going to talk about an investment idea that is way outside the box. So imagine you're putting your money to work. Not in stocks, not in crypto, but in lawsuits. Yep, you heard me. Lawsuits. I know, it sounds like something you'd see on TV, right? But believe me, this is a real thing. So let's just chew on this for a second. What if your portfolio could actually include a piece of a legal battle? It's a pretty mind-bending idea, but it's at the very heart of this new world that's just now opening up for regular folks like us.
And this whole surprising concept has a name. It's called litigation finance. Now, it might sound brand new, but it's actually been around for a while. The big change, though, is who gets to play the game now.
See, for years and years, funding lawsuits was a game played only by the big fish. We're talking hedge funds, super specialized firms with really deep pockets. You know, the kind that can make these huge, multi-million-dollar bets on complicated court cases. It was a very, very exclusive club. But that is all changing. Thanks to a bunch of new online platforms, that huge barrier to entry has pretty much crumbled. We're now talking about being able to get started with just a few $100s. The club's doors are swinging wide open.
Okay, so you're probably wondering, how on earth does this actually work? Like, how do you go from having a couple $100 in your account to owning a piece of a lawsuit? Let's break down the mechanics.
The process is actually pretty straightforward when you look at it. So it all starts with a law firm. They've got a case they think is a slam dunk, but they need cash for all the expenses. You know, hiring expert witnesses, court fees, all that stuff. That's where investors come in. You can pool your money with others through a platform to give them that funding. Now, here's the deal. If the case wins or settles, you get a share of that big payout. But, and this is the really crucial part, if the case loses, well, you typically lose your entire investment. High risk for sure, but also high potential reward. You know, a really great way to get your head around this is to think of it like venture capital, but for the legal world. Instead of betting on a little startup hoping it becomes the next huge tech giant, you're betting on a legal team to win their case. In both scenarios, you're funding a high-risk project, hoping for a massive return down the line.
So we've covered the how, but that brings us to the much bigger question, why? Why would any investor even consider this? What is the actual appeal of putting your hard-earned money into something so different?
Well, the motivations really seem to boil down to two main things, and they're split pretty evenly. On one hand, you've got a pure financial reason, and on the other, you have a more ethical one. It turns out it's not always just about the money.
Let's start with the financial side of things, diversification. Think about it. The outcome of, say, a patent lawsuit has absolutely nothing to do with what the stock market is doing on any given day. The case just chugs along on its own legal timeline. For an investor, that's golden. It's what's called non-correlation, and it means you have a piece of your portfolio that's totally separate from all that market craziness.
But for a lot of people, the appeal is about something more. It's about impact. They see it as a way to support what's called access to justice. You can actually choose to fund cases you really believe in. Maybe it's a whistleblower taking on a giant corporation or a class action lawsuit fighting for people's rights. So in that way, you're not just investing in a case, you're backing a cause.
Okay, we've talked up the good stuff. Now we have to talk about the other side of the coin, because this is definitely not a get-rich-quick scheme. It comes with some really significant risks, and you've got to go in with your eyes wide open. So what are the big gotchas? Well, for starters, legal cases can drag on for years, which means your money is tied up for a long, long time. And then, even if you get a win, the final payout might be way smaller than you hoped for, which eats into your returns. Of course, the platforms take their fees too. And maybe the biggest risk of all? The legal system is just famously unpredictable. A case that looks like a sure thing can completely fall apart. And that's why pretty much every financial expert gives this exact same advice. And this quote nails it. If you're going to do this, it has to be with an experimental slice of your money. This is money you can genuinely 100% afford to lose. We are not talking about your retirement fund or the down payment for a house. So let's zoom out. When you look at the big picture, what does the rise of micro-investing in lawsuits really tell us? Because it's about more than just a quirky new way to invest.
What this really is a window into how finance is always evolving, always reinventing itself. You have this asset class that used to be completely off limits to most people, and now, because of technology, it's becoming this fascinating niche option for everyday investors. It just goes to show you that even something as old and traditional as a courtroom can become a place for financial innovation. And all of this leaves us with one last, kind of provocative thought. I mean, it sounds a little crazy today, but it really makes you wonder. Are courtrooms the next stock market? It's a huge question about the future of money, the future of justice, and how those two worlds might keep colliding in ways we can't even imagine yet.